Here are 10 tips for financial success in 2018. The number 10 financial goal for 2018 is to define your financial goals. At the start of the new year, it's common for people to set goals, make New Year's resolutions. Often, it's around losing weight, getting more education, or starting a hobby. But you should establish one for your finances. What would you like your financial well-being to look like at the end of the year? It may be as simple as paying off your credit card debt or establishing an emergency savings account. You decide. You do it. You can be successful. Unlike most resolutions, let's make this one work. Here are some tips to help you be successful. Start small. Pick a goal that is achievable. Make a plan. A well-defined path to a goal will produce better results. Track your results. Even small progress towards that goal will help you be successful. Talk about your goal. Talk with your family, talk with your friends. They will help you be successful as well. Don't give up. You will likely hit bumps in the roads, but keep working hard. You can be successful.
Tip number 9, plan for your retirement. Start saving early. If you didn't, there's still hope to. Try and utilize your company's 401k and contribute what they match. And if you can, add 1% over their match. Most companies match up to 4%. If your company doesn't offer a 401k, open an IRA. Under age 50, you can contribute $5,500, and over age 50, you can contribute $6,500. Don't put all your eggs in one basket. Look at stocks, bonds, mutual funds, money markets, CDs, savings accounts, and always speak to a trusted advisor at one of your local credit unions.
Tip number 8, improve your credit score. The best ways to improve your credit score in 2018 are to, most importantly, pay your bills on time. This is the number one factor in improving your credit score. And remember, if you're ever late on a payment, bring it up to date and keep it up to date. Secondly, and just as important, make sure that you use your credit cards responsibly. You can have credit cards, but don't have too many. Keep 2 to 3 open and close the rest that you don't use on a regular basis. Also, keep your balances as low as possible. You want to make sure that your balances are nowhere near your credit limits because that will hurt your credit score. Also, you don't want to open too many new credit cards in a short period of time to help improve your credit. It could actually damage your credit. The other thing you want to do is have a good mix of revolving debt, which is credit cards, and installment debt, like auto loans, personal loans, and mortgages. For every credit card you have open, you should have an installment debt to offset it and improve your credit score. And finally, you should check your credit report for errors. In today's age of widespread identity theft and big company data breaches, errors in credit reports are common. Every 12 months, you should check it for accuracy. You can do that by visiting the annualcreditreport.com website, and you can also check the myfico.com website for more tips on how to improve your credit score.
Tip number 7, spend your money wisely. Don't spend money you don't have. It may be simple, but it's not that easy. We've become a society of consumers. We consume, which means we buy. Companies and their marketing departments surround us with messages to buy the next big things or the gotta have new products. Do you remember the pet rock, Cabbage Patch dolls? Or how about the fidget spinner? Did we really need them? Which brings me to the idea of the difference between want and need. To help you spend wisely, I think you should remember this fact. Wants are limitless. Income is limited. If you remember that little fact, it will help you prioritize your spending. Put your needs first. The top 2 needs are food and shelter. But even within those 2 needs, your spending can be negatively impacted by wants. You may want a pool at your house or a 60-inch TV in your apartment, but you don't need them. You may want to eat out at a fancy restaurant, but you don't really need to. For example, my wife and I a couple of years ago decided to make the decision to stop purchasing coffee every day at our local chain coffee shop. We instead bought a coffee maker and make our coffee at home. This, over the course of 1 year, saved us $3,000. Understanding wants versus needs will help you save your money and spend wisely. Here are some other tips. Avoid impulse purchases. Buy in bulk. Use coupons or applications such as Groupon or Ibotta to help you yield some savings on your purchases. Wait for products to go on sale. And join retail rewards programs. Prioritizing your spending can help you achieve financial success.
Here's tip number 6. Improve your financial literacy. How much do you really know about the financial services industry? It seems like there are new products and services introduced all the time. How do you really know what's right for you? Here are some tips to keep in mind. Review your credit card statement. Take a look at the minimum monthly payment section and see how long it will really take you to pay off your debt. Also, review fees and interest rates and see what that debt is really costing you. Take a look at your insurance coverages at least annually. Do you have enough? Too much maybe? Things like life insurance, automobile coverage, homeowners insurance, or renter's insurance. These are all important components to your financial well-being. When something bad happens, you want to be sure that you're protected as much as possible. Learn financial and investing terminology and the basics of personal accounting. Remember to ask questions, ask lots of questions, and don't be afraid to say that you don't understand. It's better to feel comfortable with making the right decision. Remember, the better educated you are as a consumer, the better the consumer you will be. Lastly, here are a few more tips to help you get better educated with financial literacy.
Hi, I'm Allison, and I'm going to talk about tip number 5 about how to save for a goal. When you identify a need or anticipate a need for a large purchase, it's time to set a goal. And in order to reach your goal, you need to have a plan. Let's look at an example. You have a sense that your refrigerator is going to need to be replaced in the next 6 months. Let's assume the cost of the new refrigerator is going to cost $600. So you're going to need about 6 months to be able to save for that. You don't have an extra $100 a month to save for that? That's okay. Here are a few tips to help you save an extra $100 a month. Tip number 1 would be to eat out less often. It is more cost affordable to be able to make your meals at home. Tip 2, bring your lunch to work. Leftovers are great, especially if you made extra the night before. That's a win-win for both dinner and for lunch. Make your coffee at home. $3 a day for coffee before work adds up really quickly. If you get a coffee every day, that's 5 times a week. That's $60 a month just in coffee. That's 60% of what you're trying to reach for the month of $100. Tip number 4, collect your change in a piggy bank or a jar. I leave jars in a convenient place like my dresser or by the laundry machine. This helps me as a reminder to save my change. Tip number 5, shop by yourself. This is less pressure to buy things that you may not necessarily need. Tip number 6, buy house brands instead of name brands. Is there really a difference? Except in the price tag. Remember, sacrifices today are big rewards tomorrow. Now, congratulations, it's been 1 month and you've saved $100. Great job. Now let's make it even sweeter. Deposit that $100 into your local credit union into a savings account and you will earn interest on that money. That's free money. Take advantage of it. Just imagine if after 6 months and you saved your $600 and your refrigerator is still working. Don't stop. Keep going. Keep saving.
The number 4 financial tip for 2018 is to establish an emergency savings account. Life happens. Sometimes what happens is unexpected and unpleasant. You or your family could suffer from a health issue. The car may need emergency repairs, or worse, someone could lose their job. So what happens next? The best way to manage a financial emergency is to have planned for it in advance. Think of an emergency savings account as your financial safety net. Here are 3 strategies to help you get started establishing your emergency savings account. Number 1, how much should you save? Save 5% of your take-home pay each time you get paid. Build that reserve up to when you have roughly 3 to 6 months of essential living expenses saved. Number 2, how to save it. Think of it this way. Pay yourself first. Ask your employer to do an automatic payroll deduction of that 5% and send it to a separate savings account. You should not mix your emergency savings funds with your everyday living expenses. 3, what should you use the fund for? Only real emergencies, like unexpected medical expenses, or home or auto repair. And in the event of a job loss, you have essential living expenses provided for. And should you find the need to use your emergency savings account, remember, replenish it once the emergency is over.
And the number 3 financial tip for 2018 is creating a budget. So far we have talked about setting financial goals, saving for retirement, or even saving for unexpected expenses. In order to accomplish any of these objectives, you must first create yourself a budget in order to track your income and expenses. Typically, most people will create a budget based on a monthly basis. First, you will write down your income, your take-home pay, which is the amount that's actually deposited into your account. If you get paid weekly, multiply that number by 4. If you get paid bi-weekly, multiply that number by 2. Next, you will write down all of your monthly expenses, which typically fall into 3 categories. First are your fixed expenses. These occur every month and are always for the same amount, for example, your mortgage or your car loan. Next are your variable expenses. These occur every month but are typically for different amounts. These include groceries or gas. I would always recommend over-budgeting, meaning setting aside a higher amount for that expense than a lower one. Last, you have your periodic expenses. These may or may not occur, however, should always be budgeted for. After writing down your income and subtracting away all of your expenses, the money that is left over should then be used to save for retirement or saved for unexpected expenses. It is great to create a budget. Sticking to the budget is the hardest part. Always track your results to see how you do and to see if you need to make any changes. Be disciplined. It is difficult, however, the results will be you fulfilling all of your financial dreams.
Here's tip number 2. Don't stress out. There will be bumps in the road, so don't sweat it. Adjust your plan, modify your budget, but stay focused on your financial goals. Here are some thoughts to keep in mind. Did you know that if you make a plan and talk about it, it can help you feel less stressed? Remember, you're in the majority. Finances cause most people the most stress. You're not alone. If your payment is late, remember, you're not the only one. Call your bank, speak to somebody, and they can help you make payment arrangements that work for you. You'll feel less stressed, and they'll appreciate you staying in communication. Remember, debt is not always bad. In the right amount and for right purposes, it's the good thing to do. Borrowing money to pay for larger purchases, things that provide a value or service over a long period of time, is the right way to use debt. Buying a home, purchasing a car, or investing in your business or your education is the right way to utilize debt. Borrowing money to pay for consumables and services that are consumed is bad. An example of that would be using credit card debt to purchase groceries. But be smart. If you think you'll own a car for 5 years, don't take out a 7-year car loan. By the time you want to get a new car 5 years from now, you'll still owe money on the first one. Again, don't stress out.
And the number 1 financial tip for 2018 is to contact your credit union professional.
Hi, I'm Joe. I'm here to help you with the purchase of your new home or to refinance your existing mortgage. I can help select the program that is right for you for the right monthly payment to help you reach your financial needs.
Hi, I'm Bob. I'm here to help you purchase the right car for your budget. I can customize a loan term and a payment that's right for your resources.
Hi, my name is Mike. Whether you're looking to do a debt consolidation, pay for a large expense, or home improvement, I'm here to help you select the right home equity product to fit your financial needs.
Hi, my name is Jenny, and I'm here to help you open your checking account. This account allows you to pay your bills and have access to a debit card. I will be able to advise you which checking account is best for you and how to transfer funds between your accounts.
Hi, my name is Saran, and I am here to help you with any of your technology needs. I will be able to help guide you through our mobile app and our online banking system, which brings our branch directly to you and gives you the flexibility to bank anywhere and at any time.
Hi, I'm Holly. For any commercial or business-related product or service, loans, lines of credit, or deposit accounts, large or small, I'm here to help you.